Plenty of red arrows on the Australian stock market, and Heidi Cooch has the details from Sydney. Heidi.
Linda, it was as if there was a simultaneous rush to the sell button this morning. We're seeing 90% of the top 200 stocks here in Australia diving into the red this morning. The resources stocks are mostly all lower. Gold, oil, metals producers, they're all taking a hit today. BHP Billiton down by nearly 3%. Separately, BHP has sold its Yabula nickel refinery in Queensland for an undisclosed sum to Australian billionaire Clive Palmer. We're also seeing Woodside, Fortescue, Newcrest, which is Australia's biggest gold miner, all taking a dip into the red today, with the benchmark index about 1.5% lower. Shares of Rio Tinto are halted at the moment. That's following its institutional share sale. 95% of Rio's Australian shareholders took up that rights offer, and that follows a 97% take-up among UK shareholders. We've had a couple of ratings changes among the major banks as well. Merrill Lynch has cut its rating of the Commonwealth Bank from neutral to underperform, and the National Australia Bank was upgraded from underperform to neutral. However, we're still seeing the major banks in the red there. And after all the unimpressive market news today, I think I'll finish with something more upbeat. Some upbeat eco data. An index of Australia's services industry expanded for the first time in 15 months in June as government cash handouts and lower interest rates stoked consumer spending. And Linda, we've had some mixed signals on the state of the economy this week. Yesterday, of course, exports fell the most in 14 months. We also had weak housing market data, and now we've had this positive services data. So I think next week is going to be very interesting to see what the Reserve Bank decides to do on interest rates at its meeting next Tuesday. Back to you.
Uncertainty, volatility continue. Well, watch that space. Heidi, thank you so much for that.